Hey guys, welcome to the Money Mindset. Thank you so much for watching our show and for all the support and love that you've given us over the last many months. Today I have with me Chirag Setalvad of HDFC AMC. Chirag, thank you so much for being with us on the Money Mindset.
It's my pleasure, Sonia.
It is one of the most popular asks to have you on the show because of the kind of performance that your funds have given in the last many years. So thank you for taking the time out. And one of the main asks was to understand what is your investment style, because I guess in today's day and age where the markets are at stratospheric levels, valuations are all over the place, it's a bit hard for investors to find value and to find good quality companies, especially from here on. So first, from your vantage point, where are we at in the market right now? And would you be slightly cautious at this level?
I think I would be more than slightly cautious. I think markets have rallied very, very sharply. You look at 5-year returns, they're in the 30s, both in the mid cap and in the small cap category. And valuations are now 30-40% premiums to their 10-year average. The 10-year average itself is at a premium to its longer term average. So valuation from any metric standpoint look expensive. And we can see that in our own, we cover 450 companies at HDFC, and the number of buys versus sells has skewed towards sells versus buys clearly in the last couple of years, and especially in the last year or so. So it's becoming much harder to find value. Finding good quality companies is quite easy, right? Because good quality as represented by good managements and ROEs and so on, that is available. But it's just the price that we're paying. We are paying inflated prices to own these businesses. And I think that, as a result, warrants us to be very cautious. We've had a fantastic run for several years now. And even 10-year returns are elevated. If I'm not wrong, mid-cap, small-cap, 10-year returns will be 17-18%. And those are very strong returns. So we need to go through a period of consolidation. That might be a time correction, that might be a price correction. But there is no sign of it now, right? At every correction, we've seen a pullback, and we are back to all-time highs. So
absolutely,
I think one has to be a little bit careful. But again, in all of this, the key is, as I see it, to invest for the long term. So the two mistakes one can make: one is to buy obviously at expensive levels, and the other is to sell at low levels. Both of those get mitigated if you hold for an extended period of time. So I think the long term, helps a lot. But yes, we should be careful.